morning and welcome. It's that time once again. Happy New Year. Patriot Radio News Hour. Starting year 20-something. I'm Joe Jaquin, CEO of the Patriot Trading Group. Happy Hump Day. I am back. I know you've been waiting. I got hammered with the winter cold. I'm still feeling the effects. I mean, it's been about a week now. I got it Thursday, Friday, Saturday, Sunday, Monday, even yesterday, but today coming around. I may use the cough button a few times. It's been a dandy. You know what, the flu shot just not getting it done. I heard the flu cases up 800% here in Arizona. I guess they missed a little bit, but sorry, all of you line up for it anyway. 800-951-0592. That is our toll-free number, legal, lawful, constitutional tender. The thing that's been on a tear, talking about gold and silver. The website at allamericangold.com. All the news, the articles, the videos, YouTube, Twitter, Facebook. We got it all for you. Just want to give everyone a quick update. I apologize. I was sick last week. Some of the shipping that I was hoping to get done last week is going to be pushed to this week. The proofs are going to be here. We'll start calling and shipping those out this week. Matter of fact, we'll have them all out this week. A couple people had some Saints. They'll go out this week as well. If you were anybody that had an order in before the holiday, all that stuff is going to be gone and out. We have the metals program. Great. January is always a great time to sign up for that. That's out there too. You go out to our website. You can read all about it. If you have questions about it, you can give us a call. If you want to sign up, it's really one of the best programs ever. You get 4 deliveries a year. You can start with as little as $100 a month. You put it on a credit card. You pick the day of the month you want us to withdraw the funds, and we ship 4 times a year. So we just ended the fourth quarter. Those will be out. That's right now about a 2-week process, but we'll be shipping. Fingers crossed. I think we can have that all out too by next Friday. So we'll just see how things shake out. But it'll be if not, it'll be real close. But I think we're going to be able to get that done for you, and we'll be all caught up and getting ready for 2018. And wow, how things change. And again, it's important. And I know it's hard because the Christmas holiday and everybody wants to go out and buy the gifts, but silver's up $2 from the bottom. Gold's up $85, $90 from the bottom. Matter of fact, gold is up again today, up a couple more bucks. 13, 18. Silver's up 3-4 cents here to call it. We'll round up a little bit. 17.25 on silver this morning. And what's going on? You start thinking about, hey, wait a minute. We got the tax cut. And the Fed raised rates, and they're going to raise rates, a few more times in 2018. And isn't this going to be great? And why are gold and silver rallying? And the answer really is a simple one. When you take away the excitement of this tax cut, you're left with, okay, how much growth are we going to get, and then how much debt is it going to cost us? And when you do the analysis, it's actually pretty simple. Because even before then, really, when you think about it, what's a couple hundred, $1 billion more a year when you're adding a couple of trillion? Why not? And you have the dollar, which when you think about it, the dollar was on this rally for probably about 5 years. The dollar had a good run. The dollar after the financial crisis got down into the 70s, rallied all the way back over a 5-year period, back up to about 100, 101, and then this year had the worst year in well, I guess last year now, right? It's 2018 now. Had the last or the worst year in 7 years. And when you kind of look at the fundamentals, it looks like a lot more dollar weakness. Some of it because of what we know is going to happen with the debt, but the other part is having to do, and we talked about it, and I know it's been a couple weeks since it's been on, but we talked about where the countries are holding their money, and we're going to talk a little more about that. The IMF published the best detail we're going to get on what the countries are holding. We're going to break that down for you and why it actually is bad news for the dollar. And even I was thought, there's only one place for the money to go. We'll talk about that. We have the store closings. Get ready; those are going to start again. We had whose button's bigger than whose. In case you saw that, Donald Trump. You know what's funny is, why not? You know, all this time we always got to be politically correct, and everybody can spout off, and so Trump likes to spout back. So North Korea talked about their button being on their desk, and Donald fired off a tweet about how he's got a button too, and it's bigger, and his actually works, and all of that stuff. It's all great fodder, I guess, for TV. You know, and depending on which channel you listen to, it's a good thing or a bad thing. My brother actually was in town. And for those of you that don't know, my oldest brother is a colonel in the Army. And I'm going to share with you the conversation that we had and what he told me about what the Army is really worried about. Some fascinating things, and it didn't really have to do with a button. Patriot Radio News Hour, don't touch that dial. 800-951-0592. That is our toll-free number. January. So we talked a lot about how December has always been a good month to buy gold. And what was funny is this morning I came in and I've been, obviously under the weather, but I was thinking about where we stand and watching gold and silver and wondering, what months are good months. And to my surprise, actually not. The reason why I like December is because I know that gold really does. January and February are really good months for gold. As an example, in the last 6 years, gold has been up in January 5 out of the last 6 years. The 1 year it wasn't higher was 2013, where it was down dollars, right? It wasn't even down 1%. It was down less than a percent, and that was in 2013. So 2012, 2014, 2015, 2016, 2017, gold always finishes higher. Well, I didn't say always, but the majority of the time. And matter of fact, if you go all the way back to 2001, so you think about when did all this start? Right, in 2001, it was kind of the starting point to this rally that we've seen, and we've had I guess what they'd call a bear market inside of a bull market, and where is all of this going to lead us to? And you think about 01, the debt was $5 trillion, right? And now it's $21 trillion. The stock market, right? The Dow Jones was over 10,000. The 10,000 hats were already out and on, and all that stuff. And gold wasn't even $300. But in that time period, there's only been 1, 2, 3, 4, 5, 6 years where gold has been lower. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 years where gold has been higher. Only 1 year was gold more than 5% lower, and that was 2011. That was kind of the what I'd call the turn year in 2011. But in the last 4 years, gold's been higher every single January, about 5-6% per year higher. The average, still trying to shake this here, but if you use that as the average, so we can expect gold to about 1370. It's been high. 1 year it was up 11%. Another year is up 8%. The last 2 years, 5.4% and 5.1%. And then the interesting part is the follow through into February. February 2016 up 10%. February 2017 up 3%. But if you look at where gold and silver finish in those 2 months, you're looking at anywhere from 8 to 16% higher in the gold price, which obviously would put gold north of $1,400, which is I guess a techno. I don't know if it's a technically important level. Definitely a psychologically important level, but just something to keep in mind. So when we're looking at where gold really shows strength, that is it. That's the months that really we see the biggest jump early in the year. Then we see some consolidation, right, and then the rally at the end of the year, which has been the pattern that we need to keep out for. But what's the big drivers? What's going to drive the gold and the silver price? And so you think about, we had the tax cut, and people talking about, there's a great, I don't know if it was an article or an interview, it's on the website this morning, talking about inflation and deflation at the same time, right? Which is, I've been telling you, we're in this stagflationary period where things are costing more, but the biggest thing that isn't is the labor or the wages. Despite all of the increase in the minimum wage, 18 states raised the minimum wage. A lot of that, by the way, just so you know, a lot of the noise from we're going to raise rates because of the tax, raise pay because of the tax. And there's only a couple that did that, a handful of companies. It's really because that's just where it is. Most of the states now are approaching $15 an hour. Some are a little less, some are a little more, but either way, that's what's happening. But here's the biggest thing we need to watch for. As the debts rise, so we're going to have the Treasury issuing more and more debt. Now that the tax cuts are done, I don't know if you saw the president now is talking about, just like we said, the infrastructure spending plan, right? They want to boost that spending and bump that up to the tune of about another $400 to $500 billion more than what we're currently spending over the next 10 years. So more debt issuances there. Is who's going to hold dollars right now? And it's been this way really since World War II. Some people don't know this. Most of you, if you've listened here, you do. One of the things that we gained as the victor of World War II was Bretton Woods, right? And Bretton Woods was really, I guess, in simplest terms, hey, we're going to buy everything in dollars. And what I mean by that is they agreed uniformly that we're going to price barrels of crude oil, bushels of wheat or corn or whatever it may be, tankers of soybeans. We're going to price it all in dollars. And this forced countries to hold dollars because they needed to buy commodities. And the IMF every year releases what they call the currency composition. the official foreign exchange reserves. So the whole thing, it's called the COFER, right? COFER, currency composition of official foreign exchange reserves. So when you look at a country's reserves, how do they hold their currencies? And the U.S., obviously the world leader, according to the latest report from the IMF, total foreign exchange reserves was just north of $11 trillion. Now, as I explained in the last show that I did, it was a few weeks ago, most companies hold dollars through treasuries. In other words, they don't leave it sitting in the bank. But they buy, and they can buy, right? They can buy a 10-day bill, a 30-day note, a year, 2-year, 5-year, 10-year, right? The 2, the 5, and the 10 are the ones you hear about. But they hold it in debt. And they buy the treasuries of the country that they're holding. That's how they hold these reserves. By the way, and this is something pretty interesting, that amount really hasn't changed, this $11.3 trillion. Over the last 3-4 years, it's been between $10.7 to $11.8 trillion. By the way, Wolf Richter put this all together. He took the IMF's report and broke down how all of these reserves are held. In the report, they broke down the allocation. The U.S. dollar, 63.5%. Actually, the United States, we lost 1% over the last couple of years. So we were at 64.6. We're now down to 63.5. Now, a lot of people would say, see, the dollar is still the king. They're not wrong with that. The problem is the dollar is at the maximum already. Nobody's going to add more to it. And I'll break it down for you. The euro was at 22.6. It's down to 20. The yen's at 4.5. The pound sterling's at 4.5. And of course, those are two that fluctuate. They fluctuate between 3.5 and 4.5, pretty much nonstop. The Australian and Canadian dollars, less than 2%. Then the Chinese yuan, and this is the one that we need to start watching out for. It's only at 1.1%. Now, that's an increase. Matter of fact, it's up about 3/100ths in the last 3 quarters. But it was 0 before then. Remember, they weren't a reserve currency. So they've gone from 0 to a little over 1%. And now they're getting ready, as we talked about, to start offering the ability to buy commodities with their currency. Something that had never been done before. So when you think about where's all of this coming from, if you start having, I don't know, 5%. You think about the Chinese are the largest buyer of commodities in the world. No one buys more crude oil than them. No one buys more steel than them. No one buys more iron ore. No one buys more, probably just about anything, than the Chinese. Where is it going to come from? At a time when the United States needs to issue more and more debt, the Chinese are going to be entering the marketplace saying, hey, start using our currency, right? And you think about the countries that already, Pakistan and India, South Korea, Japan, they're already there. And you think about, really when you think about it, The China's number 2 in GDP. Japan's number 3 in GDP. I think Germany's 4, India's 5. And South Korea they're in the top 10. Over the next 10 years, China is going to be close to taking us out, and they may or may not. It'll be really close as to who's number 1. India is probably going to be number 2. Japan's going to be down to, will be number 3. India's going to be number 3. Japan's going to be down to 4. Germany's going to be 5, and South Korea is probably going to be 6. So you think about 3 of the top 6 economies are going to be in Asia themselves. Now, I guess we could hold out hope that Japan and China don't like each other, so maybe they won't change. But you just think about the fact that if they're only at 1. Logic tells us that it should probably at least approach where the euro's at. Right? I mean, the euro is only 20%. Even if they got to 10 or 15%, if everybody got rid of yens and pound sterling, then I guess it could work, but that doesn't seem logical. There's only one place it seems like it's going to come from. That's the U.S. dollar, which is why you're seeing the dollar falling instead of rallying. Patriot Radio News Hour. We'll be back.
This is the Phyllis Schlafly Report, a daily look at the significant issues of our time from an experienced conservative perspective. Sponsored by Phyllis Schlafly Eagles, this broadcast continues the legacy of Phyllis Schlafly and stands against forces that mock traditional values, slander America, and redefine the family. Now, from the Phyllis Schlafly Center Studios, here's Ryan Haidt.
After all the fuss over Roy Moore's Senate candidacy, the media hardly stopped to examine the quality of the already seated Senate body. One Democratic member, Bob Menendez, was on trial for allegedly accepting bribes, including the use of a private jet to Paris, followed by 3 nights in a $1,500 a night hotel room for Menendez and his girlfriend. The same people who called on Roy Moore to step aside failed to call on Menendez to resign for the many felonies of which he was charged. Instead, the establishment decided to insult Alabama voters who have a right to decide their own elections, not Senate Majority Leader Mitch McConnell and the rest of the D.C. swamp. McConnell staked his future on trying to defeat Moore in the September primary, but Moore won by a landslide, precisely because voters reject the same old accomplish-nothing politics of both parties in Washington. The allegations against Roy Moore pale by comparison to what is the norm in Hollywood, which has long been one of the biggest financial backers of the Democrat Party. First, they ridiculed Roy Moore for supposedly being too much of a goody two-shoes, and now they criticize him for supposedly being too much like themselves. The criticism of Roy Moore is not about something that happened 5, 10, 20, or even 30 years ago. The accusations against Moore, which he denied, relate to misdemeanors he supposedly committed nearly 40 years ago. We cannot make America great again if unproven allegations are allowed to ambush only conservative candidates on the eve of elections. Those who had any beef about something Roy Moore did nearly 40 years ago should have spoken up long before now, rather than appear as a coordinated hit job at a convenient political moment. Liberals and the establishment hate Roy Moore for his conservative positions today, not what he allegedly did 40 years ago as an unmarried district attorney looking for a future wife. Americans are tired of double standards and the attempted picking and choosing of winners and losers by the kingmakers.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. The hypocrisy and lies of the liberal media are alarming and even incite public unrest. But the fake news and the commentators who slant coverage are finally being exposed. At phyllisschlafly.com, we promise to provide timely alerts and take effective action on your behalf. That's phyllisschlafly.com. Thanks for listening, and join us next time for the Phyllis Schlafly Report.
Welcome back, Patriot Radio News Hour, 800-951-0592. For those of you who think you've missed the rally, you haven't. We're actually in year 3 now, where gold bottomed and at 1,050. We've gone up 8%, 9% the year before. This year gold was up 14%. And if January and February are any indication, we can see probably another, anywhere from 8 to 16% has been the average here over the last few years. Could we see gold? I think, I'll just say it now. I think gold's going to take out 1,400 this year. I don't know if we'll go below 1,300 again. We'll have to see. There could be some things that I don't see, but I don't think so. I don't know that there's enough here. I think the dollar weakness is going to continue. I think we're over the next 10 years, we are going to be on this stair step down. I think by the time it's over, we're going to take out the 70s. Could we see a dollar in the 60s or the 50s, even the 40s? And just so when you hear me say those things, just remember that's against the basket of other currencies. The biggest player in that basket, who never was ever in the basket, is going to be the Chinese yuan, and I think that's where you're going to see. And there's not enough there. The pound sterling and the Japanese yen, you don't even get 10%. Right? And they fluctuate between 6 and 8% of the world's reserve currencies. You add up all the other currencies together, maybe you get another 2%. Then you have the euro and then the dollar. And I think you're going to see a big, big shift, because that shift was delayed until they made China a reserve currency country. So look for this trend to continue. Talking about, over the holiday, my brother was in town. I call him Colonel Chet. His name's Dan, but remember that movie Weird Science? The older brother Chet? That's my brother. This guy he knew he wanted to be an Army man. You're talking about, the little kids growing up, you wanted to be a policeman or a fireman. I always wanted to be a pro athlete, right? Which, you look at me today, it's pretty funny. But he always wanted to be in the military. Here was a guy in high school who was in the ROTC program at our high school. He was in the Civil Air Patrol in high school, got his pilot's license right as he was graduating high school, was going to be a helicopter pilot. And then he was a ranger. He jumped out of the airplanes and all. I mean, he did it all. And in the last 10 days, he had 10 days to go in helicopter school. He was going to be I think it was the Apache he was going to be flying. They were on one of these runs, that they go on, and I guess there was a hole and he didn't see it, and he sprained his. I mean, he couldn't put any weight on it for about 6 weeks. So he ended up, not passing. He couldn't finish, and ended up being an artillery officer. He actually was stationed in Korea when he was first in. And for those of you that know the story of my brother, he went from the regular army to the reserves, got discharged, and then after the Iraq and Afghanistan war started, he got called back. So he wasn't even active anymore. He was actually out of the reserves, got called back. And while he was in a tour in Afghanistan, he made lieutenant colonel, and then, what was it? I don't know, 12 weeks ago or so, he made colonel. So he is now a colonel. He's in the Army Reserves as a colonel. And one of the things we got to talking about, hey, where are we here? And he's a customer here, right? He started buying gold a couple of years ago. And you know what he said to me was that struck me as interesting. He goes, you know what, I'm not worried about the nuclear thing. And I was kind of surprised by that. I said, but, you know, they got the missile. You know, it can hit everywhere. He goes, yeah, they do. And he goes, I don't know if they can put the warhead on it right now. There's debate in the military themselves. Most people think, well, it's possible. They're probably still got some work to do, was his words. He goes, but that's the hardest thing to do. And I said, well, what do you mean? He goes, well, there's so many easier things for whether it's North Korea or ISIS or whoever it may be to do. He says, you know what we worry about, what I worry about? He goes, the power grid is the most vulnerable. And a lot of you out there, you know, you talk about it, or you'll call me and say stuff about it. I don't know a lot about the power grid, but my brother assured me that there is no doubt, at least in the eyes of a lot of the people in the military, that's probably the easiest for them to do, right? Hack into the power grid, and he goes, no power for 3 days is the thing that scares me the most. He goes, because 3 days is about all anybody can live without any water. And of course, you know, I started thinking about New Orleans, right? When the New Orleans filled up with water and the rioting and the looting, and I mean, it was horrendous. You know, you think back to that and how terrible it was. You're watching on TV and you're like, how can this be? There's no power. There's no water. You can't get gas. You can't do anything without power, right? The stores can't open, right? The gas can't be pumped. The power's not on. There's nothing. And he goes, 3 days. That's all it takes. And then second on his list was an attack. He goes, you know how easy it is? And listen, he just said, hey, I'm not going to say anything. It's not very hard. He goes, anybody with a, you know, middle school chemistry knowledge knows how to put together a bomb in a truck and make big explosions. But he goes, those things are easy. He goes, and then chemicals, right? And then he talked about how the body count would go. I'll share that with you here next. Who's going to die and how quickly they'll die. Patriot Radio News Hour. We'll be back after the break. (800-951-0592) Had a conversation. My brother was at my house over the holidays, and we talked about North Korea. And I don't really talk about it because I don't know what I'm talking about, but he does. He was there. Matter of fact, he's lived in South Korea probably all through his career for 5 years right at the demilitarized zone. And he said it's unavoidable if there's a war with North Korea. He goes, you don't have to worry about shooting missiles down. He goes, all that stuff. I'll get to the number. He gave me a number on that, but before I do, he goes, South Korea and Seoul and all that, there aren't, what he said is, they're in artillery range. That's how close they are. And he talked about the Korean Peninsula. He goes, what people don't know, this thing's all mountains. And where there's not mountains is where people live, right? You know, kind of, you think about Phoenix, we live in the valley. So we're surrounded by mountains here. One of the cool things about the desert here, especially this time of year because the weather's so great, when you look, there's mountains in the distance surrounding us. And he said, in Korea, it's very, very mountainous. That's why a ground war in Korea is so bloody and deadly, and and he said, listen, they have all the high ground in North Korea. Obviously, and there'd be a ground war would be horrible. But he said, as soon as the war would start, millions of people are dead in the first 24 to 48 hours because of being in artillery range. South Korea, Seoul is decimated. Even as far, go as far as Japan, same thing, right? Tokyo and all of that. If they go there, same, millions. Then he said the shooting down of these missiles. He goes, it's great when you know exactly where the missile's going to be, and you put your, the missile interceptor, that's my military term, in the path, right? If we could do that, if they would just tell us, hey, listen, this is where we're going to shoot the missiles, and we would be able to put the interceptor right in the path, we could probably shoot it down. He goes, it's not likely. He goes, he gave a number. He said 1 in 6 is how many we'd be able to shoot down. And essentially, his whole thing was, bad idea. But I just wanted to share that with you because, first of all, I thought it was interesting what he said when he was really fearful of. And said that most people don't know how vulnerable the power. It's just like anything. You know what? He brought up Atlanta. I don't know if you remember Atlanta. The airport didn't have power, right? There was a fire, no power, and nothing could happen for, like a whole day or two. He said, now imagine, L.A., Phoenix, Denver, Chicago, New York, right, all without power. And that's what keeps him up. And I asked him, I said, so would you get the call? Would you have to patrol the streets? And he says, no, that's National Guard. Right? He goes, I would not, if I got the order to do it, I would not follow it. I'm not allowed to take up arms against the people. He's part of the I guess the federal army. And then he talked about how when Kennedy and during segregation, he made all the National Guard troops federal troops so they couldn't patrol and enforce what the state wanted them to do. But nonetheless, I wanted to share that with you. I thought, it's something I don't know a bunch about it, but when you talk about this button being bigger than that button, my brother kind of just said, hey, whether or not it happens, it's a bad idea. Let me tell you why it's a bad idea, how many millions of people are going to be dead, and I'm not worried necessarily about a nuclear weapon versus, and he said, he goes, much easier for them to put gas, sarin, I forget the gases. He told me their names. I don't remember their names, but to use those instead of nuclear, and he said those can land all over the place in the power grid. So there you have it. So there's probably the last time I'll talk about military stuff till the next time I talk to him. But I wanted to share that with you because I thought it was important. Car sales came out today. The major auto dealers, they said it was mixed. It really wasn't. If the auto industry's numbers shy of last year's records, which we knew they're going to finish lower in 2017. They now say industry observers expect sales to be lower again in 2018. They said consumer discounts remain a concern moving forward. Discounts in excess of 10% of the vehicle sticker price are considered unhealthy for resale values, and in December, the estimated discounts were above 10% for the 17th time in the last 18 months. General Motors reported a 3.3% drop in sales. Ford reported a 0.9% increase in sales for December, but that was 17% increase in fleet sales. So big, they sold a lot to the rental cars. And then Chrysler, by the way, they said actual retail sales for Ford down 4%. Fiat Chrysler sales decreased 11%. So that was the big three December retail sales number. Patriot Radio News Hour, final segment coming up. Patriot Radio News Hour, 800-951-0592. That is our toll-free number. U.S. Silver Eagles, they're 410 a roll today. I've got about 55 rolls at 400 at 800-951-0592. That puts about $2.75 over spot. U.S. Silver Eagles, $400 a roll today at 800-951-0592. And I think we're going to see $20 silver this year. And you know, are we going to take out the all-time highs in silver in the next 10 years? That'd be a good guess. Just kind of thinking about where not only is the debt going, but you got to follow the dollar, follow the money. You know, everyone talks about you got to follow the money. And right now, the money is starting. It's a trickle, right? But the faucet is turned on, and it's trickling into China. And as they continue to expand what it is that they're going to be able to buy and sell now, commodities with their own currency, you're going to see the other countries' reserves go in and shift into Chinese yuan and renminbi, whatever word you want to use for it. And of course, the Chinese can dictate that because they're the one doing all the buying, which is going to put more and more pressure on the dollar. Matter of fact, this I'll tell you where the dollar's back below 92. So you think about even with a rate hike, even with we're still going to hike 3 more times in 2018. The dollar continuing to struggle, and I think the biggest reason is we're just on that path. This is the path that we're on, and that doesn't include anything happening. Let's hope, with North Korea, like my brother said, it's a bad idea. Let's hope it doesn't happen. Was his exact words, or just the natural. When you start thinking about living beyond our means, you think about what the tax cuts are going to do. If this infrastructure thing happens, we still got the debt ceiling again. That's coming here, I think, next week or the week after on that as well. All of that just kind of leads me to believe we're going to get more spending. Are we going to see trillion-dollar deficits this year? That's real. Isn't it funny? The question is, what year? Is it going to be this year or is it going to be next year? Right? What year? And again, the good number, the reported number that they like to tell you about, what year do we hit the trillion? And then the sad part is, after that, it never goes below that. I mean, well, I guess it could. I mean, if we decided to stop spending on things like entitlements, I guess it could. If we wanted to double and triple everybody's taxes, I guess it could. But at least the way, I just don't know that there's any good way out of it. And I think you're going to see more and more countries continue to shift reserves somewhere else, which is going to continue to put pressure on the U.S. dollar. I think we'll see a dollar in the 80s here in 2018. 84, maybe 83 as a low, but definitely in the 80s. 800-951-0592. First show back. We got to get into the swing. I got to get retrained. Hopefully tomorrow will be a better one. Everyone take care. Have a great rest of your day. We'll talk again tomorrow.